government shutdown. How do you invest in the face of that? Tyler Vernon is Chief Investment Officer with Biltmore Capital, and Steve Masaka is Managing Director with Wedbush Securities. Guys, good to see you. Tyler, let me start with you. When I look at the market reaction, it seems to suggest that what's happening in Washington is political theater and not necessarily of deep economic impact. Is the market reading the situation accurately?
I think it is. I mean, the fact is 1%, not even being able to cut 1% out of our deficit, or out of the budget, that's a major problem. I think investors are concentrating more on really what's going on with earnings. And the fact is, quarter after quarter, we're getting better and better earnings. 60 to 80% of companies are beating expectations. We're getting good news in the labor markets. We got good news yesterday with retail numbers. And the fact is that investors realize that Ben Bernanke wants to continue to push asset prices higher, and they're behind this market. So I wouldn't stand ahead of what's going on. The Fed we had the sail up, the Fed is blowing in, and let's keep it going.
Steve, are there specific stocks, though, that might get impacted by a shutdown because they depend on government revenues?
Well, yeah, I was a couple of names I wanted to mention today were SIGA Technologies and Cleveland Biolabs. These are two companies that are expecting government contracts any day now. They're anti-terrorist stocks. Cleveland Biolabs has a anti-radiation poisoning product. SIGA Technologies has a defense to smallpox if there were some kind of bioterrorism. Both of these companies are expecting large government contracts shortly, so that's kind of the kind of stocks that might be affected by.
I'm sorry to interrupt you, but we put a graphic up that says you like these stocks, so you like them despite even if they get hit.
I would like them. I like them, and I would really like them if they did get hit. I'd be looking to buy these stocks if they got hit based upon a government shutdown. So this would be one of the things I'd be looking to take advantage of.
All right, Tyler.
So they haven't so far.
Okay, Tyler, let's look past the situation in Washington a little bit. If you are playing the economic recovery game, what names would you be putting cash into right now?
Okay, well, first of all, we love some of the volatility that's taking place, and Biltmore Capital runs some covered call option strategies. So as a strategy standpoint, we love options at this point for our investors. But we think, again, a little bit more higher beta play, and I'm going to go out there a little bit, but MGM, there's some great stories that are going on there. There's an IPO from its Macau operations that we think is not worked into the current price. We think that's a $1 billion plus IPO. The company should retain 40% ownership in it. There's some positive things that are going on over there in Vegas. So, again, I think there's going to be some real upside.
And the other ones you like are Berkshire Class B and also General Electric. Yeah,
I think, again, a little bit more conservative side. I think those stocks have some real upside. They took some hits with everything that's going on in Japan. But I think especially with Sokol and what's going on with Berkshire, there's some great entry points on these stocks.
Interesting. Steve, what are you thinking about right here? And are there any particular names as we really get into earnings season that are going to tell you whether or not they're, serve as a bellwether for the markets?
Well, I think you have to look at a larger sampling, not any particular name. And I think one of the things that I've seen this quarter for the first time in a long time is pre-announcements have been somewhat more negative than we've seen in the past. And we're seeing a lot more companies guide down, and I think there's a real concern as we go into the quarter about the impact of the Japanese earthquake, the impact of higher energy prices, the impact of unrest in the Middle East. Not so much did it impact the first quarter numbers, but what's it going to say about second quarter guidance? And I think we may see some companies come out and be very conservative with guidance, which is something we really haven't. I mean, we've seen the usual lower the bar stuff, but I think even beyond that, I think we may see some more conservative guidance coming from companies. So I'm entering this earnings season a little bit concerned. Also, we're starting to see the ECB potentially tighten. Liquidity might be getting turned off. There's some signs out there that I think are concerning.
Got it. Tyler, Steve, thanks so much for joining us today.
Great to be here.
Some very big names making some very big headlines in the online travel space. Coming up next on Power Lunch, late word on a new deal that inserts Google into the center of the game. Expedia also